ecosystem of there's a whole ecosystem of women investors. And what we're trying to do is get the Harvard Business School Women's Association community to get to know these fund managers for a variety of purposes, right? For educational, how they got there, what they're doing, learn about what some investment funds are doing in a kind of intimate setting like this. We're usually between 10 and 20 people, so that's right about where we are today, in the room, and leave time for questions so you can really ask Julie or myself any questions that you may have about anything that's related to fund management. The Harvard Business School Women's Association, as you know, is a global organization now. A lot of people don't know this, but 20 years ago, I was on the board of the Harvard Business School's New York Women's Association. And it took like 15 years of lobbying at Harvard to let us go global, because our point was Harvard Business School women, move around. They're not just in New York City. They may be in New York City for some of their career, and then they might be in Hong Kong. Why are we excluding them? It's probably one of the more powerful networks in the world. So welcome to it. The normal person who introduces this, either Debbie or Lexi, can't be here today, so I don't have the upcoming events from the Harvard Business School Women's Association that normally we would be talking about, but you are obviously welcome to. It is definitely all on our website. So without further ado, I would like to introduce Julie Castro Abrams, who is the founder and CEO of a group of organizations that she's going to tell us how they work, but it's How Women Lead, How Women Give, and what we're going to talk about today, How Women Invest. So Julie is an ecosystem into herself. I'm going to let her walk you through her background so we can get the full story. Full disclosure, Julie Castro Abrams is on Hypatia's advisory board because of her deep knowledge and understanding and commitment and celebrating of women investors and how to get our fund to scale. So I'm really proud to have her here today. Julie, thank you for being here, and thank you for sharing your story with the Harvard Business School Women's Association.
Well, thank you for having me. Well, it's an honor to be here with all you badass, brilliant women. I went to University of Chicago for my graduate school, but I sent my son to the undergrad at Harvard. So there you go. That's my big connection. Flew back and forth for quite a few years. So I started my career actually in justice work. I have both an MSW and an MBA from the University of Chicago. So my whole goal has been to marry, you know, data, business practices, and impact. And I started my career working with very low income people, and in fact, started a type of a bank. Most of you probably heard of microfinance, and you think of that as internationally with Muhammad Yunus. But I actually ran the largest women's focused microfinance and micro enterprise training organization in the United States for about 12 years, which was wonderful. But for any of you who have worked in anti-poverty work, the secondary trauma, the constant threat and concern about people's lives, it gets to you after a while. So when I was in my mid 40s, I was like, okay, I think I'm done. And what was interesting is this actually uncovered for me a life stage. I was going through it. Then all of a sudden I brought a bunch of women to lunch and I realized, oh, we're all in a moment of discernment, kind of in your early mid 40s to your mid 50s, depending on how fast you ran. And for some reason, I wanted to run really fast in my life. But I actually realized I was often the only woman in the room, or I was the most senior woman in every room I was in. And I mentored everybody else. But really, I hadn't found Patricia Lizarraga yet. I hadn't gotten my community of super senior women friends and spent time cultivating those deep relationships because I was just trying to survive being a mom and being the CEO of this bank and doing all those things. And it's very interesting. It coincided with a whole generational transformation that Patricia was alluding to. So here's the financial and the numbers. In 2010, only 10% of public company board members were women. I worked with a bunch of other people to pass a law, do a bunch of movement building and placing women on boards. And we actually got that number up to 34% by 2022. That we've had some slippage, no surprise to you because of what's going on with the anti-everybody movement we've got going on in this country. But we're still, above 30% and we're doing okay. And so think about the massive transformation that has on women's work, on women's leadership, on cultures and corporations. And one of the things we started to look at was like, listen, I can legislate and we can track public company board behavior. And this is Patricia's jam, is all the public companies, right? But if I really want to impact corporate behavior and culture and women's opportunities, we have to actually look at when companies start. And culture set in the first 30 people. So I started looking at private company boards. Well, 65% don't have a single woman on the board. 65% are setting these cultures we are now paying for. We see Hollywood movies about that are really bad. And then we see these guys rise up and have bad behavior as the CEOs of the largest companies in the world. So who's the first board member? Well, it's an operator, CEO, CFO, or both, right? And then they bring in a couple venture capitalists. And so I started looking at the women's venture space. I'd run a bank, and this had always been in my mind. And at the same time, in 2010, we had 12 women run venture funds in the United States. So no surprise, we weren't fueling enough of the companies. And no surprise that only 2% of all venture funds went to companies founded by women. So by today, we have 380 women-run venture funds in the United States. So
380?
Oh yeah. So
Oh wow.
that was much less. Yeah.
I'm very late. I thought it was
Yeah.
250.
Yeah.
380. That's amazing.
380. And why is all this happening at the same time? It's happening because of us. We've never before had a generation of us. I'm in my 50s. I can still say that for another year and a half. I'm in my 50s still. But we've never before had a generation of women of this volume with our educational attainment, our operational expertise, and the power and influence in our careers that we've achieved, and the wealth that we have amassed. You may not think of yourself as wealthy. I don't know, but in aggregate, we certainly are. It looks like women have approximately 34% of the wealth today. So I'm sorry, 54% of the wealth. My bad. And so we're in this new day, and we're also all of us coming into this life stage. And the life stage in your mid 40s, your mid 50s is called midolescence. I wish I had a chart where you could see all of this hockey stick growth happening.
Julie, can I ask you a question?
Yeah. Yeah.
And everybody else, if you have a question,
Yeah.
there's not that many of us in the room. We can all ask
Yeah.
questions. So
Yeah.
is the midolescence, did you get that term from somewhere or did you make that
Barbara
up?
Waxman, a friend of mine who's a coach of a bunch of corporate leaders. Barbara Waxman came up with that term, and she wrote a little book, a little compendium on it. So there's interesting things. It's sort of developmentally. She coined it because she's like, well, in adolescence, a lot of us are like, I don't know what I want to be when I grow up. Well, I don't know about you, but if you're 50, I keep asking myself that question, even though I'm fully, engaged in life. You're constantly revisiting, is this the right thing for my life force, my energy? We have hormonal changes happening just like we did in adolescence. But there's some interesting other things that happen. In midolescence, you start having values become really important. And so that clarion call that's asking you to have an impact and asking you if you've done enough in your life, it's just developmentally normal. You're special, but you're not any different than anyone else if that's what's happening to you. This is a normal life stage. And so doing things with other women and having an impact is actually part of the recipe for happiness at this life stage. I don't know if you look at your own life and like, have I been doing that, not realizing this is actually, a lot of us are seeing like videos from some of our matriarchs, that are, in movies and stuff talking about their girlfriends being so important. It really, really is. And there's a lot of things we're just now starting to define and understand about women and women's behavior. So I did a research study on the investing behavior of women. And because I thought, well, you know, we need, the venture is got to fuel the next companies we're going to see and the leaders we're going to invest in the future. But where are women? Well, women are grossly underrepresented in venture capital as limited partners or LPs as investors. We are also we are more likely to trust and hand over a lot of the decision making about our investment strategy to a professional. And often we find some friction in your values search with your advisor who will say, oh, no, 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 that's too risky, and things where they talk down to you. And a lot of women are realizing they need to find a better advisor, especially if they inherited some money and inherited an advisor. We start to really want to take more control because we have, yeah, I was just, like I said, I was just trying to survive in my 30s and 40s, Patricia. I was like, I'm just glad I have a retirement account. Like I don't know where it's
Right.
invested. But then you look under the hood and you're like, oh no, it's all the bad things and the bad people. And so then I looked at women's public market behavior. Well, a lot of women, a lot of us think, and you hear it out in the universe, that men are better investors. It's not true. Women are actually better investors. Why is that? Well, men, and I don't know if all of you have been watching this stuff about men actually being more emotional than women. We define women as more emotional, but it's the guys who can't control their anger and their behavior, right? Well, they are emotional investors. It is about ego, it's about how big and how much, and they actually overstate their capacity as investors. They start trading individual stocks and think they can get ahead of the market because they might have some brilliant insight. It is not accurate. That is not true. Women, on the other hand, are more likely to invest in an electronically traded fund or a mutual fund. And they're better, more calm investors over the long run. They're in for the long term. And so, and as a result, they have actually better financial performance. Um, so, so, so if reflect on yourself, um, uh, what I want is to get the message out, Patricia, that we know what we're doing. We, women and men are culturally socialized so differently. The men are told, men are invested in and hired and promoted for their potential. Remember that guy that got promoted for his potential? And you're like, what are you people thinking? And for us, it's what we've done. We're hired, promoted, and invested in for what we've done. That bleeds into all parts of our life where that's why women act like perfectionists, because you have no choice. Otherwise, it's so much harsher for all of us. Um,
I have a question on that
yeah,
perfectionism because
yeah,
one of the things that I hear about women investors that I don't know if I 100% agree with is that women are more risk averse. Some
yeah,
people say
yeah,
risk aware,
yeah.
etc. And I saw something, and I don't know, if you know Carrie Carbonaro, but she's a financial advisor, and she wrote this book about women and wealth last year. She's on a big book tour, and I introduced her an event, and I read her book. And one of the things she said is that it's not that women are risk averse or risk aware, it's that we were brought up to get it right.
Yes,
So we don't
100%.
want to make a move
Yeah,
unless we think we
yeah,
really understand what we're
yeah,
doing.
yeah.
And so
And especially our
what do you think of that?
generation, especially our generation. I've talked to my kids about this. My daughter's 33, right? And I'm like, she said to me one day, she was like, oh, mommy, you told me I could be the CEO or the president, but what if I don't want to be that? And this idea that somehow you can't even entertain this idea. And I just think it's this mantra of we got to be perfect. We have to do it all right. The other thing is you have all kinds of invisible labor. Um, I was just trying to survive in my 30s. Then I enter in early 40s. Then I enter a phase where my kids are grown up. And then I got family care responsibilities with my parents and dealing with all kinds of other things that, frankly, my husband doesn't do that stuff. Yeah, I took care of his parents more than he did, just all the logistics, if nothing else, right? And so we have to give ourselves a pass. And then we have to say, enough already. This is not accurate. So women are not risk averse. In fact, they are, Black women in particular, the most assertive investors of all, and they're more successful as investors. So I think we have to really untangle and look at this, and then think, okay, what are my values? Because that's our clarion call right now. If women is our values, then we should be looking for investment opportunities, and I'm not promoting any specific ones, except maybe you should check out the WCEO from Hypatia Capital, that ETF, because it is somebody else is picking the grouping, and it is a diversified group of investments, and you can also see great performance. So, but how can I get my values realized in my investment strategy? And there was a study last summer, that came out and said, women just need the first two steps. We're too busy. Make it simple. Let me kind of have a reasonable entry point and then get going. And so, I always ask people, because I am in the venture space, like, do you have at least $25,000 in your retirement? Everybody raises their hand. Groups of 300 women. I don't care what age you are. Like, you got to have some money in your retirement, right? And then I say, well, the wealthiest people in the United States, half of their assets are in private markets. If you are not looking at how much you're in private versus public, is it values aligned? What do I get out of it? So, for example, you invest in venture capital and you go to your next networking event, and you literally have people, they change the way they talk to you. If you're looking for a corporate board seat and they see that you invest in venture, they make assumptions about what you know, and that is fine. Get over it. Call me if you have any questions. Like, if someone asks you a question about which venture funds to go to, we got plenty of people who can tell you that. You can probably Google it. And so I just think it is an opportunity for you, for your power, wealth, and influence, that if we're not activating our values, thinking about the public and private market opportunities, we're under engaging with our wealth and a huge asset that we get to leverage.
And Julie, do you think, because this is something I find really interesting. I know everybody, we're all human. We all some days wake up in a good mood, wake up in a bad mood, wake up excited, or wake up scared, or, especially nowadays, you read the news, you might be a little nervous. So what I have found, and maybe this is just me, but I want to hear how this jives with the middle essence and just with this whole idea of investing your value. So I sometimes find that if I'm feeling frustrated, action takes me out of that space,
Yeah,
right?
100%. It's
So
sad.
so so it
Yeah.
distracts you from focusing on these thoughts that are things aren't going my way, because all of a sudden you have to be focused on the task of doing something that is connected to it going more your way. So
So
you feel like
instead
making
of
progress.
instead of spending the day swirling on whether or not we're invading Greenland and all of Europe is going to, go to war with us, maybe we could buy $35 worth of WCEO ETF. Like, no, seriously, taking some action is SAB. You just named it. It is a really important release valve. Just get doing something that
You
we
know,
think is
and
important.
watching a podcast or taking a seminar on values investing, and there's so many out
Yeah.
there that are just, free and available. And,
Yeah.
I think that if you do it a little bit at a time, you start getting knowledgeable and you
Yeah.
start realizing that
Yeah. Yeah.
and you don't have to have all the answers to make that first step of
And
investing.
I
And maybe
would
that's
say, all of you Harvard gals are brainiacs and are gonna, if you're like me, I intellectualize everything a little too much. You know what? You don't really have to read all that much and do that many podcasts to know what values in line investing is. It is like, what do you care about? Do you care about climate? You care about women? You care about, what do you care about? Okay, there, then just take action and find an investment vehicle. And even if you start small, so this, our research shows that for corporate, we have women in my network, the Society of Women Engineers, a bunch of general counsel associations. Those are people we researched because that's my target market. All of those women said $25,000 is a super easy first investment in venture. Um, Emotionally, especially since it, in our case, at my venture fund, it's spread over 4 years and equal, so it's $6,250 a year. And you can use cash, a retirement account, or a donor advised fund, any investable asset, right? Most people are like, fine, sign me up, show me what to do. Because $25,000 of, investments that where you get to be part of a community, you get to align it with your values as a women's investment vehicle. It feels like you took action, you did something important for your life and your portfolio. Um, but I think we're
So,
just
so,
busy.
so
It has
walk
to be
us through.
easy,
Sorry, go
Patricia.
ahead.
That's the thing. Got to be
Yeah.
easy.
Walk us through, what How Women Lead is, how women give is, and then let's talk exactly what how women invest
Yeah.
in, kind
Yeah.
of going through the fun, the sequence of funds you raised.
Yeah, you got it. Okay, How Women Lead started as my friends. I brought a bunch of women I'd done stuff with over the years together when I was in my, I was starting to understand I was in this pivot stage in life in my mid 40s. And everybody came and no one would let the person that was talking about neuroscience of teams speak. And none of them would leave. And the restaurant was like, ma'am, you're going to have to pay an extra $2,000 to keep these people here. And I was like, wait, why? And someone was like, you have the best network. And I looked around the room and I was like, oh, everybody here is like in the C-suite or like very, very senior at this point. Cause as you get older, all your friends do too. And someone put a LinkedIn group together and said, and I was a victim to them. That's how Women Lead started because I was just doing, following the old brick road with trying to meet my friends' needs. And they're like, do this again and I'll bring 5 friends. So for a while I would buy out a bar and we would have a speaker or we would do some different things like that. After a while, it was like you're paying for your own cocktails. And this is the magic of the How Women Lead network. It's never network just to network's sake. It's like, let's talk about getting on corporate boards. Let's talk about how to elevate your brand. Let's talk about the pivot in your life or talk about how to, just even basic things like this year, if you're negotiating compensation, you need to think about how you're going to do that given everything that's going on in the world. Just a container for a conversation for a half an hour with other women who can help or give you some technical tips. Those are the kinds of things we all just need a little shot in the arm. And then you're doing it with other women who become friends, right? So that's how Women Lead started. But the other thing is, I, as a justice and person, right? I was like, all right, well, one, how do you actually make systems change? There's a woman, her name is Heather McCall. She wrote a book called Forces for Good. And literally, in order to move a market like we did with women on boards, and we didn't do it alone, I'm just part of the ecosystem, but one of the bigger players, I guess. Um, you work on policy, movement building, research and education, and you get into action. So, for example, we passed a law on corporate board diversity, public board diversity. I serve on the governor's commission on blah, 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 and all that good stuff. And I say to everyone on this call, tell 10 friends, encourage them to think about getting on a board someday and make sure it's in their pathway, right? So, movement building, hearts and minds. We got to make sure every woman in the United States knows about how they can step into the power, wealth, and influence opportunities. And they don't think it's for somebody else because that's what we all think. A friend of mine's the chair of the board of Blue Shield. And when they tapped her on the shoulder to go on the board, she was like, oh, I'm not ready. And they're like, yes, you are. And then she became the chair of the board in short order. Like that's what we do. Um, so, so, so I move markets with a system and structure. And people can come and I always say, I want individual and collective success. I want you to win, but I also want us all to win. And at a certain point, now I'm entering my 50s in that moment. And I was like, you know what? If I'm going to keep my life force in this, I am only going to do it with women who behave in the way I want them to behave. So the culture is really hard on women. And so your membership fee is you have to commit to our credo. So here it's 4 things. You got to be fierce advocates for other women. If you are a mean girl, if you talk badly about other women and tear other women down, we ask you to leave the community. We ask you to say yes to helping each other. We need to do deal making with each other and stop this weird behavior that I was taught where you can't make introductions for people. Patricia's the best at this. Um, to reinforce her voice when she speaks up and isn't being heard. The next time Patricia comes out with a Hypatia notice about the women CEOs of public companies, we should all be promoting that and reinforcing her voice because the culture has dimmed our light. We aren't in the news in the same numbers as men in finance and business news. There's a lot of cultural problems. And then finally, we ask you to be unabashedly visible. Take up space because my daughter's watching you and she's getting her cues about her leadership from you. So if you say yes to those four things, you're part of our network at How Women Lead until you choose to exit. And we have a lot of opportunities for you to engage and just learn. It's just learn, network, learn, network. Let's change the world together. The other thing we did is we started a giving circle, and we give grants to women and girls organizations together. It's $10,000 unrestricted grant, and we democratically vote. So we get applications, and then we all decide, okay, we're going to give it to these 3 organizations this quarter. And then we also have, I don't know if any of you have been doing justice work around the world or, know if you're on the boards of nonprofits, but it is brutal to be on the board of a nonprofit. 90% of people will only do it, of women will only do it once because it's so hard. You have Jim Collins wrote, Good to Great. Well, he has a compendium for nonprofits, and he's basically like, everything I told you, throw it out the window because nonprofits are brutal. And he was like, you have so many masters, and it is true. And so we created a program called Women Leaders for the World, where every year we have 3 cohorts of 20 global leaders doing justice or change work, or helping make sure girls, have sanitary pads so that they can go to school, whatever it is around the globe that is needed. Those women apply. And if we think they're badass beauties, and they're going to really make something happen in the world, we let them come through our fellowship. And you could be a global advisor and give an hour a month for 7 months to support that leader in her journey.
Awesome.
So there's a lot of different things that we do on the giving side that is the values and heart work that honestly, that's probably the biggest glue people have with us. It's fine, you get a board seat, but if you help someone and you see, you get the privilege of being part of a leader's journey, doing big change work, it's pretty extraordinary. And then finally, we started How Women Invest. And this was, we have, I don't know if everybody here knows what percent of all of the venture funds in the United States go to companies founded by women. But in 2025, it was 1.2% and far under 0.5% for Black women. So the numbers are just really, really bleak. And we cannot complain about who's running companies, about not getting equal pay, about not getting C-suite access and ladders being broken. Honestly, I don't believe we can complain if we don't do something about it. And if you have at least $25,000 in a retirement fund, you need to be putting assets towards venture and fueling female founders or climate women solving for climate or Black women founders, or there's so many different lenses you can take whatever is important to you. But I just want to remind you, like, you have assets and power. You may not feel it today, but like Patricia said, it's salve if you can get into action. So that's what we do.
So
We're not doing much
that
other
is,
change work around venture, but
yeah, but I think, okay,
laws and whatnot.
so your background is so fascinating. And that's why I really wanted to bring it. I wanted to bring it into this discussion because I wanted our listeners, and this podcast will live on at the Harvard Business School um, library, is that there are different ways to become a fund manager. And there are different reasons why you become an investor. And I think Julie's path is such an important, uh, it's such an important model to see where this can come from. You didn't have to start your career at Andreessen to then raise your own fund. So Julie, I'd love for you to walk us through how the first fund came about,
Yeah.
the second fund, and the third fund, because
Yeah.
Julie's How Women Invest is now on their third fund.
Yeah. We'll start a fourth this year. Okay. So you mentioned people who worked at a male-run venture firm. Okay, you're trained by the guys about the behaviors that have resulted in 1.2%. So just keep that in mind. A lot of people have to evolve their systems and strategies if that's what their background is, a venture capitalist. Starting your own business and having a successful exit is actually the most often effective venture capitalist, someone who really knows how to, all the challenges of starting and growing a business. Um, the other kinds of people who do it are people who have, massive networks. So I have a couple of these. I've run a bank. So not Andreessen, but I helped over 6,000 women with microfinances. So I did lending for thousands of women, starting businesses, different kind of investments. Those were loans, and some other asset tools, but that's part of my background. And then I've got all of these women wanting to make an impact in the world and all feeling like no one ever, like I've got people, someone who made $25 million in her last exit with her company, general counsel at a company sold to Microsoft. It was the fourth largest acquisition by Microsoft in history. She made $25 million now, and she had two big exits as a GC. Not a single VC said to her, hey, come invest in my firm. I did. And so women literally tell me no one's ever invited me to invest in venture. It's always felt very bro-y, which I'll tell you when I go to the conference, I don't go to many conferences because it's not for me. I just like I don't learn stuff from those guys. It's not comfortable. And so in COVID, after I'd been planning it for a couple of years and I was going to launch in March and I was like, ooh, nope, not now. So I waited until later in the year. In 2 months, we raised $10 million from 221 of my friends. And it was pretty fast and easy in like 2 months. So that was my first fund. And the guys create billion-dollar vehicles. A 30-year-old boy starting a venture firm is going to actually start with a $100 million fund. Women are different, for better, for worse. I wanted to prove I could do it. I wanted to have my systems down. I wanted to know that I wasn't going to convince someone to invest in something that I didn't 100% know I could have an outcome with. So my first fund, we sold the first company in 6 months and people got twice their money back, and more than twice actually, in 6 months. I sold another company in 18 months at almost 3x. So I started selling companies early. Now my goal was 10x to 100x after 5 to 10 years, but that was pretty good and people were really happy. And so I was like, well, that was a later stage Series A B fund, but there were a bunch of seed stage companies that I couldn't invest in because they were outside of my thesis. By the time they were ready for my funding, I couldn't actually get into their funding round because they were so hot. Their lead investors and others took up all the investment opportunity at the Series A. So I was like, all right, I'm going to start a seed fund because I want to get in. So raised that in a short amount of time, started another $10 million vehicle. And now I'm like, all right, I proved it. I got the best track record in the country. We're good to go. I've only lost one company out of both of those funds, which is kind of unheard of in these markets. And we started a $100 million vehicle. The first thing I did is go to people who'd invested in one of my first vehicles. And I said, hey, would you put $1 million into this? And I got 22 people that agreed to that. So I knew I had already commit a great amount of commitments from some of the women who'd already benefited and seen the work and been excited about it. And I'm in fundraising process. I've got some institutions that'll put in 25 and 15 million when I get to 50 million. So I'm almost there. I could kind of see it. But that $100 million vehicle is real. It's kind of more like big time. And once I finish that, I'll do another seed fund because I finished all those investments in my seed vehicle. But this is the thing, Patricia. I'm a systems person. I'm a change maker. It is not enough. We are the only firm in the country that only funds companies founded by women with no male co-founders. So my values are everywhere around it. And if you look at I'm a returns focused investor, and we do an impact report every year. Women run extraordinarily pro-social companies, which is just spectacular. And the data is really beautiful. I'm a quant nerd from the University of Chicago. But when I went out to fundraise, all these institutions are like, $100 million is our minimum investment amount. And I know, Patricia, you've experienced this at Hypatia, where, you go to talk to them and they're like, oh, you got to reach this almost impossible bar, because how on earth are you ever going to get there? And there were so many barriers they would put up. They would be like, oh, how are you going to go from 10 million to 100 million? We think you should just grow 30% every year. I'm like, well, I will be a 500-year-old before, before I can get to any level of scale. So, I'm not going to listen to your dumb advice. And so a bunch of institutions, like, you can't get on the Morgan Stanley platform for all of their clients to be able to invest unless you're raising $250 million from Morgan Stanley alone, which means your vehicle has to be $1 billion. There's not a single woman-run venture fund in the United States that could actually take that money and be on that platform. Same with Goldman. All of these institutions, these major asset allocators, and people who are giving a pathway for investments, they don't have a single woman-run venture fund in their entire platform. And here's the rub. 73% of the top performing venture funds are run by women. No surprise. No surprise that women founders return 35% more for their investors. It's dissonant with what the culture taught us. So you actually have to believe the data. What a concept. Because this is where you make real money, is investing in women leaders, women as, public companies, private companies, and venture vehicles. That is really how you make the most money in our country, is a good diversified female leadership portfolio. That's my jam. So I'm creating a fund of funds to solve for this problem. $1 billion vehicle. I'm doing it with a previous chief investment officer at CalPERS, which is the largest pension fund in the world, and a couple other really extraordinary leaders. And we are, it looks like we have an anchor or two lined up now. And that $1 billion vehicle will allow us to invest in women-run venture firms in the US. And we'll invest in the top performers, and we'll help them get to bigger scale. That's kind of my vision. So I'm
And it's such a bold and exciting vision. And I just think it's something that's really needed. Julie and I have been talking about this, um, and I think it's a bold vision. And I can't wait for it to start getting the kind of institutional backing that it deserves and we all need. Because if we want to change the world, we have to take action. Take
yeah,
action
yeah,
all over your portfolio. So
yeah.
it's real, the venture
Yeah.
part is really, really
Yeah.
key.
Yeah. And
Um,
I know 60 women-run venture funds that will take checks of under $100,000 that are raising today. And they're on this little platform. And we actually encourage people to go to other women-run funds. Within a year of investing with me, 30% of my investors will invest in 2 and 3 other venture funds, because they get it now. They understand it and they're excited about it. And I'll tell you that, we've raised $200 million for other women-run venture funds. No cash exchange. It's through the nonprofit. And my goal is to get 10,000 women to invest in venture for the first time, and that's $1 billion on average. So,
Yeah. So tell us, let's pivot a little bit before we stop for questions. Let's take the last part to talk about what your investment criteria
yeah,
is. And obviously it's different for the different funds. So maybe the range in this
yeah,
fund that, in the seed fund, what were you looking for?
yeah,
And in fund
yeah,
two, what did you invest, or fund one, what did you invest
yeah,
in? And then fund three,
yeah,
what's your criteria? Because obviously it's a bigger fund.
yeah. So there are a couple ways to describe this. So I just want to make sure I don't want to use lingo. A pre-seed investment, a company that's raising pre-seed money has an idea, but they don't have a prototype or minimum viable product. Seed stage is, I just got my minimum viable product. I might have one client, but I have yet to test the market and start to mature a little bit. So the companies are valued at less, but there's more risk. I have portfolio companies that have changed their name 3 times. So they keep changing until they get it right. So you have to understand the risk reward. Series A and B is when you start to see maturation and hockey stick growth. But my $1 million investment is worth less ownership stakes in the company. Well, it's not worth less, but I have less ownership stake in a company. So there's and there, you won't necessarily have the same impact over time of a successful seed investment, but there's more risk on the seed. Ultimately, both of them have the same return, if you look in the over time. So it's not really going to have an impact on you which one you pick. Sometimes it's your just what your risk tolerance is. Series A, B companies, you can look at their average contract value and is it going up? ACV, this is, we got a bunch of acronyms in this industry. You can literally see, are their clients coming back from one year to a next? Are they upping the contract value? You can track, honestly, it's very easy investing at a Series A, B. You just have to make sure people want you as an investor and having great reputation like we do, and women want to have a group like us. And but so that's not really our problem. But it's an easier analysis, unfortunately, because of the way companies get valued, et cetera. My biggest challenge at Series A B is that you often find companies where, I'm not going to be able, even $5 million, I can't own enough of this company. And I have to have conviction I'm going to see a 10 times return in 5 to 7 years. Sometimes a company will come with $85 million valuation, and you're like, this is going to have a really big exit for me to ever make any money, even if I can put in way more than $5 million. So you guys, hopefully some of you guys are good at math. It's just a math exercise in many ways, right? Like, are the multiple 10 times 85 million, let's say you didn't even do another funding round, blah, 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 you don't get diluted. That's almost $1 billion anyway. So, there's not that many women unicorns. I got to believe in you, but those are going to be rare. So. That is that
That's,
helpful? And so I only fund
yeah.
companies founded by women. I'll have stage definition, seed or AB. And technology enablement's really important. I don't do much consumer product. I've done two. And seeing all kinds of supply chain challenges in both of them. They're okay and they're doing well, but it's a lot of grit. So I have to be able to see a 10x in 5 to 7 years so that I can return the money to my investors in my time frame of a 10-year fund. And I research what's going on in the market and make decisions about where I see hot growth, but it's not like it's a firm, that it's always one thing. My portfolio is just so magnificent.
Yeah.
I don't know if
So
that's of interest to you, but I'm happy to show
I,
some highlights,
yeah, it
Pretty
is.
fun.
But I have so many questions. I have so many
Yeah,
questions on
great.
that. But I'm just going to, before I keep asking, I'm going to say if anybody has a question, please put it in the chat and I'll start asking them now. And while you're thinking about those questions, I will ask you, what are your, top hits in your portfolio? A couple minutes about what you saw in them and how's it going. And in the case that they're exited, how exciting was that?
I
I
mean,
like that.
everybody knows this from like, you read the books or whatever. Grit, someone who's willing to do it when times get tough is everything. And so, and I'll tell you, that founder is so critical. The ideas evolve and shift. So if somebody is evolvable, if they're not, you can actually really bet on the founder in many ways. Um, when I first started investing, I get so starry-eyed about brilliant, strong women. I just love it. And sometimes people cross over into narcissism laying or whatever, where they can't listen to anybody else and they're just such a bulldog, you're just literally can have no influence. And so that's, just really refining, understanding human behavior is. And there's where my social work skills come in, and I have analytical skills and social work skills, if you will, human behavior skills. And that's kind of the critical thing to be able to balance out. So yeah, I mean my wins are I actually replaced a CEO. There was someone who is a public company CHRO who spun off a really great product from her company and became the CEO. She was not going to be able to be the CEO of a startup. It was impossible. I tried for about a year and then I replaced her. She made $22 million after 18 months. So do not feel sorry for her. She now has a couple big houses and she's good to go. But we sold that company in 18 months at a really good return. And it wasn't easy. But I learned about that. Like, if all you know is public companies, the politics and and I don't say politics in the bad way, but just being political. And I think that's very different than I'm going to wake up at 5 in the morning and borrow someone's truck. I'm going to do whatever I need to do to get the to get the win. Very, very different. Um, uh, so I see
So
some questions in here.
yeah, so here's a question. What
Yeah.
did and they're very similar, Marie and Math had the same question. So what advice would you give to women who have a great idea and even a minimum viable product, an MVP, but need pre-seed capital? What advice would you give, and what are some of the pitfalls?
Um, I generally that is angel investing. There's some exceptions. It's very easy to use the internet and AI to figure out who's a pre-seed investor in your category. But you have to be really, if I say I do seed stage investing, don't come to me with a pre-seed idea and get mad at me and try and convince me you should. I can't. Like everybody has a thesis. So you got to know the thesis of the venture funds. There's not that many that do pre-seed investing. There's some. I would get a group of Harvard Business School alums together and say, hey, can everybody put five or $10,000 in as angel investors? That's really kind of the pre-seed land, if you can, is getting
Mhm.
those friends and family, they call it. It's kind of an easier, that's really the normal route.
And there's something called the Angel Capital Association, the ACA, and its leadership is usually women.
Mhm. Yeah, yeah.
Right now, the current president is, just for the question and the answer, is Kristen Montague, who is a fellow advisor with Julie and I, and she wrote a book called Jump or something, but her fund was a Jump fund. So she did an angel fund 10 years ago. And now she's the president of ACA, and the Angel Capital Association is actually full of women because women actually are interested in angel
Yeah.
investing more than
And
men.
you're basically, okay, let's be really honest though. Um, when you make an angel investment in somebody you like, you're not doing a due diligence funnel like I do. I'll look at 100 companies and make 1.5 investments with a disciplined diligence process. And then I'll negotiate the terms with a lawyer. You're not going to do all that. You're going to say, I believe in you. But the reality is it's not really the best investment strategy for you. But you can do it. It's kind of like lending money to family. You don't expect the money back. And if it comes back, you're like, yippee. So I put $10,000 into a women's health product transportation thing in Africa. Started in Rwanda and grew into Kenya. I was like, I am never getting a penny of this back. And I'm just like, it was a friend became the CEO. And like there were reasons why I did it. I'm like, okay, it's now a Series C. I'm like, oh, great. I still might not get any money back, to be honest. But it's grown a lot. I didn't do disciplined due diligence on that. I was like, do I have enough liquid cash? Do I like this? Is this person important enough to me? Do I like what they're doing? Done. Here's $10,000. That's not really strategic portfolio management, but it is how angel investments are made and how pre-seed money is raised by a lot of us. So there's two sides of the coin. So I would say for you seeking pre-seed money, think about what I just said. Are you going to inspire them with the vision? Are you trustworthy? Do you have a relationship with them? And you can use, there's actually some more mature crowdfunding sites these days where they will actually vet you the crowdfunding site will vet you and they'll make an initial $1 million investment in you and then put it on the platform and say, hey, we vetted them. Everybody come, and invest, but you have to have a natural audience. So Harvard Business Women's Association, you know, that's a good natural audience. But if you don't have a network and you don't like to ask, if you don't want to ask people, if you don't want to be, if you don't want to be in that business, crowdfunding is really hard and no one's going to do it for you. You have to be if you're going to raise money, you got to be the front person. You got to be someone people trust and like, and that you can explain the vision crisply. And I would say communicate
Absolutely.
with them on a regular basis. I mean, Patricia, you've been in this business. You've done angel investments, haven't you?
I have done quite a few, maybe too many.
I
I
have
don't
a
know,
long list.
but
I'm
I've
like,
that's I did two
uh-huh,
actually
uh-huh.
early on 20 years ago. One, I got 100% return in less than a year. So then I did another one And that one, I got, 20% return 7 years later. So I,
Yeah.
I got my money back in both of them. One of
Yeah.
them, I wish I'd put more money in. The other one, I'm like, okay, I wish I would have put less money in. So
Yeah.
angel investing is risky, but I am a big believer in funds. So this isn't,
Yeah.
it's not a sales pitch. I just think I'm really busy. I'm trying to do a bunch
Yeah.
of things.
Yeah.
And
Yeah.
I'm not a venture capitalist, and I'm not
And I have
a
a team of 12 people out there doing all the work related to it. It's not
yeah.
like,
So
it's
I
just
would
me.
rather pay the
Yeah.
2% and
Yeah.
have somebody who's really spending 95% of their time doing it
Yeah.
do it for me.
Yeah.
Because they're going to make smart decisions, and I invest through funds.
Yeah.
So that's why I love things
Yeah.
like How Women Lead, how women invest, who are 100% invested in
Yeah.
women. Because I will tell you,
Yeah.
I am very fortunate, as I think many of us are, who have worked hard and made money, and I don't need to have, um, I can afford to be picky
Sure.
with who I'm investing with.
Yeah.
So we have 5 minutes
So
left. So
can I
there's
just say
one
one
last
more,
question
yeah,
here, just and then your question.
one more thing related to pre-seed investing. Here's another vehicle because two people said, yeah, me too. There's something called a special purpose vehicle. And this is kind of old news, but some people still hang on to this old story where you want to have a cap table that's clean. You don't want 500 investors that you have to manage all their different interests. Spreadsheets and it's not that hard to do anymore, but whatever. Let's say you don't want a lot of different names on your cap table. You can put together a special purpose vehicle. It's basically an LLC. You can have 20, 50 people put money into it. And the special purpose vehicle invests in your company. So they put in the $1 million or 2 million or whatever. A lot of people find that that's a better strategy. So you don't have a lot of individual angels on your books. So that also is another thing. Think about crowdfunding, individual angels, and a special purpose vehicle. And then there's some pre-seed VCs. A minimum viable product actually generally is crossing over the line of actually being a seed stage investment. Everybody has a different definition, but if you don't have your prototype or MVP yet, that's pre-seed. But once you have it, you're considered seed. So go, you know,
Mm.
you can research all the great women.
Okay, Marie has another question. What's the best platform to use to raise and keep track of pre-seed money?
Well, I mean, there's crowdfunding tools or an SPV as a strategy. Are you just talking about software? I mean, it just depends. Is it 10 friends each putting in, $25,000, 250 is enough to get you started? It kind of depends, right? I'm not a big believer you need a massive platform for everything. In terms of software, the providers change all the time and every day. So I think it just depends. People use Carta. I mean, some different fund administrators. It kind of gets you can man it, but it's not cheap. It's not free. So
I
Carta's,
have a question, Julie, just
had some
for
problems, but
pre-seed, presumably you wouldn't have that many investors. So do you really need a
I honestly,
software?
if it was me, I'd put a spreadsheet together or put
Yeah,
in a
I think
database
for
tool or
pre-seed, I
something.
think
I wouldn't really buy
even
a
for seed,
tool.
if you have less
But
than
people use
20
things like
investors.
Carta and then they put their financial statements on there and Carta does the interface so anyone can see all their stuff at any time. It's a portal. If you think people are going to be asking you questions, you can that actually gets you a little bit of a wall between you and maybe makes you look a little more professional. So there's some tools out there like that.
All right, so I think we're time's up. We've got 2 minutes, so we're going to wrap up. Julie, is there any final words of advice? And then I will sign off for Harvard.
I would just say tell 10 friends. Don't don't just sit, take some action on something. Buy a piece of WCEO, you get a little involved in the ETF or something. And then tell 10 friends and just say, listen, we got to do something. And you've gotten the benefit of, great careers and education. We just got to get into action. Otherwise, where else do we think this world's going to go if we're not part of it, part of the solution?
Absolutely. So I think those are the great final thoughts. Either way I put it is invest in others because they will invest in you. Sometimes I hear, but I don't have any money. Then invest time in others and it'll pay itself back, because when we act like a community, we'll start benefiting
There we go.
that. And you can see it happening. You can see it happening now a lot. So thank everybody for joining. I'll see you in a couple months with with a soon to be announced speaker. And Julie, thank you so much for
Yeah,
joining us.
pleasure.
We did not color coordinate before, but I think
I
we
know. Look at us. We're both in our Power Red Harvard Business
I
School.
love it. All right. Talk to everybody soon. Thank
All
Thank
right.
you.
you.
Okay. Bye.